Hey guys, good morning. How are the both of you?
Good morning. Good
Hi
afternoon.
guys.
Good afternoon to Peter.
Yeah, good
Yeah,
afternoon, Peter.
You're
You're calling in from the center of insurance right now, is that
the,
right?
the
coming,
mecca of insurance. It's very
coming
exciting.
from the home of specialty, I guess you could say, here at the Lloyd's of London. So yeah, good
Yeah.
to be here. It's actually the Lloyd's cohort pitch day today for the Lloyd's lab. So I hope to come down and see a few of the performances going on, just to see what's happening out there in the world of InsurTech. But always fun to come down. What
Yeah,
about
you were
you guys?
supposed
How's the week been?
I was gonna say you were supposed to have lunch with John McNeil and you canceled it for this, right? I think that's what
Of course, the
yeah,
age of the age of the MGA comes first, always, always.
yeah,
All right,
expect that.
Peter, I got to ask, did you travel with your own podcasting studio, or do they have one for rent, or how does this work? Where are you right now?
Yeah, they have one set up for me, don't they? No, I bought a lot of the stuff down with me on the train, so it's very quickly set up, ready to go.
Look at that, it's
Perfect.
mobile.
Yeah,
Love it. Uh, Dylan, what's going on in Virginia?
Beautiful weather. The plants are growing. Flowers are out. Algae have started. Normal Virginian springtime.
It's very
Beautiful.
springish.
Very springish.
Yeah, love it. All right, he gets a little bit of big news. It might, by the time this comes out, might be under the radar again. But the next acquisition everybody's talking about in insurance land. Peter, I heard you had a couple shares in that, right? I think you were angel investor.
which one are you talking about here? There's been a lot of acquisitions I've
Oh,
seen.
Next.
he was like, let me look at my
would be great.
portfolio.
Yeah.
I'm not quite sure.
Yeah, let me just
Pull that up.
check that.
Yeah.
Wow, that was a substantial one. Yes, I was also thinking the Howden announcement of yet another brokerage acquisition in the US. But yeah, next, I mean that's a big step for the world of InsurTech in general, right? We knew
Yeah.
Munich Re were always involved in that, so for them to take the next step and go into it, great for them. Yeah.
Yeah.
Great for them. Amazing.
Yeah, absolutely.
What do you make of that, Doug? Because that's your wheelhouse. What was your thoughts?
I mean, definitely good for the space. Shake some dust off of the acquisitions.
Doug's trying to be so careful right now.
Yeah. Great company. I'm slightly concerned. And this is not a Next problem or a Munich Re problem. I'm concerned for the market from a euphoria perspective. I think we've seen this before, and now we've thrown AI into it. And no offense, lots of great companies being created, lots of companies where I don't quite get the value prop or the moat, and are raising lots of money, which I love. Like, I love that there's excitement in the insurance space. But the hangover, as we saw a year and a half ago, can be pretty horrendous. And so this is not just an insurance problem either, especially when it comes to AI. But some cautious optimism, but I'd like to see, maybe a little bit deeper analysis into why these things are worth what they're worth, more so than just like consensus chasing, which is I see a lot of. Yeah, that has nothing to do with Next. So don't Next lawyers and Munich Re lawyers, please save your paper, keep it. We love all of you. You're great people. So why don't we talk about somebody that's coming up to be the next potentially very interesting cyber play that we've going on. Peter, guest that you've secured for us.
Yeah, it's going to be amazing to have Kirsten Bay on with us from Cysurance. Love what they're doing in what is a pretty congested space. I mean, we think of cyber insurance, it's not really the new must-have line anymore. It's been around for a long time. There's been a lot of conversation about this as a product in the market, and it'd be interesting to get Kirsten's perspectives on so many things, but take-up rate, appetite for the product, how that market is fluctuating at the moment, how they're going with their own capacity conversations as well as they expand more and more globally. And particularly interested to get a take on some of her unique distribution models that they've put in play extremely successfully in order to get customers. Lots of interesting stuff going on. They're far more than just a cyber MGA, so I'm sure we'll hear about that as well, of all the other aspects to their business. But what I really wanted to get on, because, we get asked a lot, I'm sure Dylan and Doug, you do, but people come to me and they ask about setting up a cyber MGA, and they see the opportunity with that. And very few have managed to do it as successfully as the Cysurance team. So a great case study for everyone listening of how to make it work in what from the outside is a very congested space.
Great.
Yeah, I think one of the big dangers with cyber right now, of course, is on the claim side. It's a tricky space. I'm looking forward to digging into what they're doing to prevent claims, because that's obviously the best thing you can do in cyber. How you can mitigate those damages once a breach has already occurred. I'd love to know how they're handling their claims and keeping their loss ratio down.
Yeah. Dylan, how does the God of Claims and Thunder handle a cyber claim?
Yeah, well, I have this really magical hammer, and generally I use the hammer. Pretty much any
just like any other claim
leads to the hammer. And
hit it with my hammer, and everything falls in line. And
exactly.
You're happy. You're very happy when you get my settlement offer.
Exactly.
Yeah. Spoken like a true claims guy. All right. Well, hey, I see Kirsten has popped on here. So why don't we bring her in?
Sounds great.
Yep. Hi, everyone. As mentioned just now, we're delighted to have Kirsten Bay from Cysurance with us. And we're really excited to hear, Kirsten, about two things. Most importantly, yourself as a person and your background. We're always fascinated in that. And then tell us all about your company. And I know from our discussion just now, we've got so many questions and topics to dive into with you. So it should be a really interesting conversation about a space that is hugely interesting. I think cyber insurance in general, to so many people in this space. Lots of hopes about what the sector will deliver, what it will become, what it has been over the years, how it's changing. So we could not think of a better guest to get into all of those details and nuances of this space. So first, Kirsten, welcome to the show. We'd love to hear about you as a person and what brought you to this stage in your career with Cysurance.
Well, first of all, thank you for having me. It's great to see you all. So it's always fun to kind of have a band together. That's such an interesting question. I sometimes think, well, why not start a cyber insurance company? When we first started Cysurance, someone asked me about what we were doing, and I explained it, not as articulately as I am now, because simply I know what we do. We know who we are now, which takes some time. But I was like, yeah, so this is what we're doing, the cyber insurance thing. And he's like, wow, that's a really big idea. Like, eyes got really big, and I was like, well, I didn't just roll out of bed and go, hey, let's start an insurance company. Like, it was like years of buildup, but it was a very funny thing to me, because I don't know if people do, like when they start other cool companies, like food delivery companies or something, they just wake up one day and go, hey, let's go do that. So it was years and years of buildup, but starting in the supply chain and finance world, and you've heard the story is I had someone come to me when I was in the banking world doing sort of portfolio risk modeling, and they were like, hey, you want to work on a book on built-in security? And I'm like, you mean securities, plural? And they were like, no, security. And I'm like, sure, why not? I haven't a clue what that even is, but let's do it, right? But it was really this idea of data being the new currency. This was 18 years ago. And how do we actually value that? And one of the epiphanies I had was in this time of the financial crisis, when we were looking at what is a house really worth? What are those portfolios really worth? How do we actually value anything? And what's the trust paradigm that holds on to, I'm going to buy something from you and I know exactly what that's valued at and what it's worth? It's a true worth question. And that's what got me into security, really thinking about how do we manage those risks? How do we manage the risks of understanding that there are adversaries trying to change the world in a way that changes the value of something? How do we protect it? And ultimately, like now, where we are now, how do we insure it?
Yeah. Kirsten, I met you probably 7 or 8 years ago, and you were, Cysurance was a thing. I think you were still kind of developing it, maybe, if I understand correctly. But how have you seen it evolve, like over this period of time, from its very nascent to now? Like, the actual insurance component of it, being a real tangible thing. Like what did that journey look like? So I think I'm curious, like what you thought it was going to be, back in 2018. And I, every time I talk to you, I try to understand what you're doing. So hopefully this time, usually it's like out over a couple of drinks. So maybe this time, with my full attention and no alcohol involved, like I'll finally grasp it. But I'd love to maybe just understand the journey and then understand exactly, what you're doing today. Just for my edification.
Well, maybe you didn't have enough alcohol. Maybe that was the actual
maybe.
I think it's like you decided to do an insurance product with the only other industry with as many acronyms, and you're shoving two of them with. Right before the show, we were just talking acronyms, and you're busting out 4 or 5 in a row, and I was just thinking, this is so insurance-like. So now you're adding those to insurance acronyms, and wow.
Well, it is. I always have said there's this natural synergy between cybersecurity and insurance, and so that could be one of the key linchpins is our great love of acronyms. but it is interesting. The aha for me was in my way back time when I was running cybersecurity companies, and we were looking at network traffic analysis, and I've done a lot of work in cyber threat intelligence, and how do we bring all this data together to help people make the most overused phrase, actionable insights, actually doing things with that data that help reduce noise and improve their efficacy of making good and sound decisions. And so we partnered with an insurance company. We partnered with Amlin to release a product, and we got like 140 applications right away. And we're like, oh, this is super great. And then we found one. And I was like, I don't know. I'm thinking that's kind of not good, generally speaking.
And was that the underwriter that was like 139 got denied?
No, they just didn't follow through, or they didn't finish the application, or they didn't. Okay. There was a they didn't do something, or something didn't make sense, right? And this, of course, was when cyber insurance was still pretty young. I mean, I would say it's still pretty young, but when we asked people, well, why didn't you move forward, or what kept you from completing an application? And these are security practitioners, and they were like, I don't know what you mean by data encrypted in motion. I mean, I know what that means, but what do you mean by that? And so what I realized was this complete bifurcation between people who actually do the work and this piece of paper that arrives on their desk that makes no sense to them at all. And so as a security person, I was like, we need to actually make this a unified buying journey, because I believe there's not another type of insurance that really is intrinsically linked together between cyber insurance and cyber practices and controls, where one can really look at the direct outcomes of those controls and whether they were effective and what the severity and impact of that incident might be. And so that's really where the vision started. Interestingly, jumping ahead to now, we look at our pitch decks that were really kind of ugly, but from then to now, and the basic vision is exactly the same as it was when we started the company, which is probably the most, I don't know if it's gratifying or scary. It's like, maybe we should have changed our minds a little bit, but we evolved the idea, but the basic idea is still the same.
Nice. Sorry, I'm still trying to grasp. Maybe cyber is like my bugaboo. Like I'll never be able to get it. And I'm thinking back, it might be because the role that killed my work as an attorney, or it's like I can't do this anymore, was reviewing like 250-page data security addendums. And when you were talking about this kind of disconnect, it had me thinking about the disconnect that we had working for Marsh and dealing with all of our Fortune 100 companies. I and the other legal team were reviewing the data security agreement. We had some business people involved, but the data security IT team people were nowhere to be seen. Like they'd send some notes over, but you had, these two groups of people that probably should have had no business, talking about what rules should be in place and what the procedures are, and then the resulting insurance of that. We were the ones, determining all of those things when the actual practitioners, the people that know know what potential harms are out there, what these systems can do, what they can't do, how they can report, things like that. They were not involved in that process. So is that also part of, like, you kind of see bringing the actual practitioners in closer to the process and the insurance process in particular?
Yes, absolutely. It's a key piece of it. And it's like, I'd like to say, in that CISO world, that we can help make a little C a big C in that room, because you're exactly right. Like in prior roles that I've had, I remember we were doing a really big deal with a telecom, and the security spreadsheet that we had, it took us 4 months to close our deal because it took that much time to get through the security and legal components of it. It was like 160 tabs. It was literally thousands of questions, and we weren't even touching their network. And what ended up coming of all of that discussion, without, with mostly lawyers, but a few of our security people, but ultimately not our security people, was you have to fully indemnify this organization in order for this deal to move forward, which had to be a board decision, because that would be an end of life decision for our company if something really serious happened. So here we are making this massive decision, of course, consulting our team, but not having that voice in the room when those final calls were actually being done. And so that is a big piece of it. But the piece of it for me is, and I hopefully this will help solve some of the disconnect, is the way we look at it, or the way I look at it, is this layered risk model. And inherently, when you're looking at a cybersecurity risk or a risk in an organization, how you manage and the controls and the potential of something bad happening in your environment, what is the implementation of those controls, and how are they established in the organization such that you have the best coverage you possibly can have against a risk? And so what we wanted to do is we developed, we'll call it like a rapid recovery, but like a warranty product that attaches to that piece of it. One, demonstrating this product works really well. We tested it, we evaluated it, we did all these things to identify that, so that first party layer of risk attaches to the implementation, because we know that's where we can control severity the most effectively. And then we layer insurance on top of it, a primary policy that can sit there in terms if it were a catastrophic event. And so what we really wanted to demonstrate to the market, one, is that this is not an intractable risk, which a lot of people think it is. It's just because it feels really big, and it is. If you read about everything that happens on a daily basis, it can be really scary. But the other thing is that we can manage it if we understand what the environments are doing. And so I call it our cyber seatbelt. It's not 1,000 things. It's like 6 things that we know effectively manage severity. And ultimately, what people want, which they can't have, is they want 0 in the cyber world. We don't want any incidents. It's like, that's great. You want someone not to run a red light and hit a car either. We all want that, right? But that's not physics. That's not real life. And so these are the things that we're trying to help establish in the insurance world, which was, as we go on and become smarter and understand things globally as a whole network of people, that we can point to, we know these controls will keep us contained in that incident, so that we can pay an incident, but not a total. It's a fender bender.
Yeah. I think for me, what I really love about your business and your model is you've seen an opportunity, you've seen these partnerships, and you're reaching a market that is actually incredibly broad. And probably at the time when you were starting, the amount of, cyber advisors, security providers that you're working with has grown exponentially. I mean, that market's it's become incredibly competitive. I'm really interested, before we again narrow down on your business, just in general, the cyber space, the science. I'm sitting here in Lloyd's today, right? Cyber insurance is always a topic of massive discussion here. The interesting thing for me, from an outsider to it, is we all know there's market cycles in insurance. We're used to it, hard market, soft market. The thing that's amazed me about cyber is we had this real push. We had all of these financial lines underwriters stepping into the world of cyber and writing, and people buying huge limits as organizations. And then again, from the outside, this is my perception, with this contraction of risk where companies were almost turning around and self-assuring or buying less coverage and less levels of limit. What's your take on the market as a whole? Have we found some kind of leveling out for this space, this sector? how much does that affect you as well? How much does the reinsurance cycles for you affect the business you're doing on a daily basis?
Well, I'm at this conference and I was talking with some people from the insurance side, and they were actually saying we're really panicked because prices are dropping so fast that it's really impacting people's books. And I was like, well, that's okay, because our whole thesis has always been that insurance should be less expensive anyway. But because we guarantee the first portion of that risk, right? So we feel like this is a way to create equilibrium in the market, and we think there should be some. The challenge in this market is it's very shocky, in the sense that it's like living through earthquakes, where there's a lot of quiet period, and then all of a sudden you have a big earthquake, and everyone's like, oh my gosh, we need earthquake insurance again, and look at all the damage it caused. And so we're in this strange period where there's this big transition that's happening around losses. And so ransoms are actually dropping finally, but they're being replaced by business compromise, which is actually it's way more dangerous, because I call them cyber muggings. It's like someone rolls in and just steals $1 million out of your bank account. It's like, well, I'd rather deal with a ransom attack than someone just coming and convincing me or somebody else to just wire money, AI, all these other risks. And so not to be like a sky is falling kind of person, but I don't think we know. And I think that's the challenge, is we're kind of going through this little quiet period, and prices are normalizing, but we know, to your point, Peter, it will change again. And we'll see. Well, the thing I think that has created better equilibrium also is the insurers finally have gotten the memo that you have to have controls, like real controls, and you have to look at them. And you see like Beasley and many others building or buying managed detection response platforms for managing incidents in a way more effective way.
And are those their internal incidents, or those are their customers' incidents?
They're customers. And so they're actually trying to incentivize doing a lot of what we do, but when we tie insurance to the implementation, is buy an MDR from us and we'll give you a better deal on insurance.
Got it.
So I think we should back up for just really quickly and assume that there are listeners who have not, they're not familiar with your company at all. So can we talk about, some of the things you've been talking about is prevention, mitigation. Can you tell me what Cysurance does to assist with that? What is that value prop for the customer? And definitely explain, we've talked about, you've used insurance, you've used a warranty, and then there's also the technology side. So can you just kind of lay that out for what a potential customer would hear from you?
Yes. So our primary customer is a security product or services provider. So that would be organizations we work with are like Arctic Wolf, as an example, or Sophos, well-known brands that provide cybersecurity services, and also managed service providers. And so what we do is we certify either the security stack that a managed service provider might sell to an end customer, a small, medium-sized, mid-market business, or directly to an end customer through a product provider. And we certify that risk based on, or the product based on efficacy. So we go through a whole testing solution to identify how effective it is. And then they purchase a warranty from us for the benefit of their customer. And so when a customer buys something that falls into what we believe is the right parameter of security controls based on their products and implementation of those solutions, then their customer gets a warranty solution that is in a range of 100,000 on up, depending on the complexity and comprehensiveness of the product itself that they're buying. So that's step one.
All right. So and then there's an insurance product layered on top of that as well.
So then the end customer can buy insurance from us, to help sort of break the regulatory complexity for the providers. So you can imagine security providers don't want to touch the third rail of the insurance issue and regulations and all that. So what we do is there's kind of like a twofold path, right? One is I'm already a customer of some organization that has and I have a warranty, and warranty enables me to buy an insurance policy that's highly discounted. Or we get involved in a lot of net new acquisitions. So someone's looking at buying one of these products, often because they're in a renewal process, or they they're going through their application for cyber insurance and realize they have some pretty significant security gaps. And so they go to one of these organizations to purchase a product to fill that gap. And what we've determined is, well, we can reduce the cost of that insurance substantially because a warranty comes with that solution. And then we're able to actually shift those dollars into the product purchase and out of insurance. And we sometimes, depending on the size of the risks, we can save them $10,000, $20,000 to really almost pay for the entirety of that increase in security posture.
So really quickly, warranties depends on the state, like insurances are regulated differently. So can you talk a little bit about that? And because that's a whole different product. Most people that we're talking to on this podcast are only involved with insurance.
Mm-hmm. Well, I think we have reams of paper now at this point where we've had opinions written on this topic, both in the U.S. and globally, and really looking at how we tie it to product efficacy so that we can stay in the lane of being able to protect it, and also that Cysurance itself is the certifying entity. So we try to make sure that that's the warranty is really coming from us so that we can boundary the regulatory risk. And so that's how we bring it to market and really have a global footprint on that now.
I think in general, for people listening, if you're trying to build an MGA right now and you have an avenue towards starting with a warranty product, it can be a much faster moving process. Both from a regulatory standpoint, but from a partner standpoint as well. So, Kirsten, maybe people will be reaching out asking, how you kind of like divvy that up and made that realization. It doesn't work for every product and every insurance vertical, but definitely something to kind of keep in mind.
It's true, and for us, what we did was the other thing at the time that we started the product was reinsuring it was getting to be more difficult because so many companies were leaving the market. And so we started a captive at that time so that we could then make sure that we had it protected. And so that then was the MGU. So we had an MGU that was issuing the clip. And so that also enabled us to manage through some of those regulatory components that were a little bit more complex. But as you know, that becomes a very expensive proposition. So we had to be able to balance all the cost analysis with being able to bring it to market in a way that we knew we could manage it through a clip process.
So these are some very complex insurance maneuverings that I'm hearing. Like when I think about your story, is like, Kirsten's bebopping along from Wall Street back 20 years ago, and somebody said, "Hey, like, why don't you start running these security firms?" You're like, "Okay, I'll do that." And then you do that for a bit, and then all of a sudden you're like, "I'm going to build this extremely complex insurance mechanism that takes 10, 30, 50 years of experience to understand how to build all the regulatory nuance." How did you make those connections and like figure out how to thread that needle, I guess? Because I think most people can't, even from the insurance space, because they're so specialized in a certain area, to kind of put all those pieces together. Really, really curious on that.
Well, because I did work in financial products, I understood how to create financial solutions. And so that was a big thing. Is product development for me has always been probably the most interesting part of creation of anything. And so understanding how to build a financial product, like working on teams when releasing ETFs and other types of more regulated products in the marketplace, it gave me a real understanding of how you do it. So I had a blueprint of sorts. And then I just kept asking questions of people and really surrounded myself with people who had really deep knowledge and just kept learning from them. But there was always this sense of, they would say something like, "That doesn't make any sense. So I'm going to go ask like 25 more people until I get to an answer, not necessarily that I want, but that seems to make sense kind of in the stack of knowledge I had around, well, this is just how you build a financial product and get it out into the market and manage regulators in general." So I think that foundational piece was very helpful for me. And then just, I'm a person, anyone who knows me knows that I have this really weird tenacity where I'm like, I just won't let go once I bite down.
Love that. But you have to have that to be a successful startup founder. You have to have that grit and determination. The interesting thing for our audience, and we try and reach a lot of people who are at the stage of thinking about an idea, about to launch their own MGA, or as we've talked about here, perhaps other type of vehicle. The advice you just said there is gold, right? That you have to speak to loads of different people. You cannot create these things in isolation, in a bubble, and go out and try something. And I think about the amount of connections you have in your world, your partnerships with the managed service providers, your partnership with your capacity, your partnership with perhaps brokers as well, all the different things you have to manage in a different conversation, a different way. There's a lot of people involved in making Cysurance the business it is, right?
Absolutely. And I'm on the road every week for that reason. But I love it. And I love, when the light bulb goes on, and it's exciting for people to say, oh, we can actually talk to our customers differently about this. It gives us a way to show value of cybersecurity. And ultimately for me, that's probably the most interesting part of it, is helping organizations understand the dollars and cents of why it's not an operational sunk cost, why it really is an investment in your business. And I have these ongoing debates today. They're like, no, people are, it's not ROI. There's no ROI in security. I'm like, so a great example, I just read this morning, 23andMe officially dead, right? Why? A massive, massive security breach. They just could not recover. It's probably the most visible failure of an organization due to a breach ever, in my opinion. But you think about the trust, back to the trust paradigm. Here you have my DNA, and you lost it because someone just had password reuse. I mean, so you weren't even paying attention to that. What else are you doing? And that ultimately becomes the question.
Yeah. Dylan, by the way, my DNA is now on the black market in case you are looking to pick some up,
Yes.
for any
I've been trying to clone Doug's for a long time.
Yeah.
Well, and rightfully so. I mean, yeah.
Well, so I have more questions about distribution. I have questions about your thoughts on cybersecurity within the insurance space, Kirsten. But Dylan has been itching to ask some claims questions, so I want to make sure that he gets a chance to
many claims questions
and chat about those.
Yeah, we've talked about some prevention already, and I think that's a really important part. It's how do you keep that loss ratio at a level that keeps you profitable? Obviously, there's the operation side for all the rest and making sure that you have a profitable company. But without a solid loss ratio, you don't have capacity, you don't have a product, you don't exist. And MGAs and NGAs need to remember that always, that they're responsible for that money. And what they're writing. So just, I guess first, when we again talked about prevention a little bit, can we talk about the mitigation? So once a claim takes place, what's being done, and what does your team do to make that, a less of a loss than it could be?
Yes, well, the first step is when we get an incident. So we have a pretty strict reporting requirement in terms of hours. And it's 48 hours that someone needs to report once it's identified. And that truly is identified, meaning a security incident has transitioned from we're trying to mitigate or remediate an incident into this is a full-blown incident response situation. And so when that trigger happens, we need to be notified. It's one of the challenges. People don't quite get that, which I'm not entirely sure about, because you don't crash your car and not tell your insurance company. So that's something.
You'd be surprised. You would be surprised. I'm not, Kirsten, I'm going to tell you that I have received first notice of loss months after a car accident. So,
and the best part is,
I hope that does make you feel better. It's
the person is telling Dylan, like, I had no idea. I'm sorry. I just had no idea that I was in this accident.
Oh,
I had no idea that my bumper was dragging back into my car.
It was a love tap.
Yeah.
Well, good.
There's a family of people dead attached to the bumper. No big deal. I just drove around with them for a while. It's amazing how frequently you're going to see folks not calling a claim, and sometimes it's because they're scared that their premiums are going to go up. There's this constant concept of Is it worth it to file the claim, based on, SIRs, deductibles, whatever it may be, depending on the product, and the size of the company, whether it's personal lines or commercial. But it's always the same calculus trying to be done. They don't, and it's, since it's kind of a black box to them, they don't know how much their premium will increase. And so they don't know whether this is worth it. They also don't know about the publicity. In your case, I think that's one of the other major issues, is they're just worried about the publicity of this. How do I deal with this? And as a person who's handled cyber claims as well, I know the answer, which is you want to get ahead of it. You want to be in front of it. You want to control the narrative, right? But they're scared. They're scared of what's going to happen when that information leaves their founding team or C-suite team. They're afraid of the premium increase, and they just don't know if it's worth it based on the SIR and the deductible. Those are the common things I'm hearing from people.
And I think I see that as well. And what's interesting to me is that's the whole purpose of the quick reporting period, is to help get ahead of it as quickly as possible and know that we're starting the remediation process and that we're along the ride on that remediation process as quickly as possible. And what's interesting is I've gone back and I've looked at our claims and said, well, what if we moved it to 5 days, just as an example? That when we have that line of demarcation between when people should have and when they didn't, it's an order of like weeks, mostly on average. Like we just got one in, it was exactly 6 months ago. Like, by the way, 6 months ago, we had this big event. We totally remediated. It's all done here. Here's the bill. And I was like, that's not how this works.
and I want to be clear on that point. So this is, and this is, I think, a really important golden nugget for everyone who is deciding to create their own product. If they're making their own product from scratch, it should always include things that make the claim process easier and also mitigate further damages. And so if you have some level of control, the only way you're going to get any control as the carrier or MGA, whoever's handling the claims, is by noting that the claim has even occurred. And so I'm assuming that in your policy, what is occurring, that 48 hour requirement, is that a requirement for them to have coverage? If they go beyond that 48 hours, are they now in a situation of declination of coverage?
Yes.
Yeah. And so that's a really important note. So in that 6 months later, someone comes and says, hey, we've got a claim. Guys are sorry, guys. No, you don't.
And the other piece of that 48 hours is because they're not sitting in isolation by themselves, right? Every one of these implementations is sitting with someone who provides a security service to them and has alerted them that this problem has occurred.
Yes.
And so we work with all the customer service teams to be very clear on, we are now issuing a ticket for instant response. I call it little r to big IR, right? Which is responses. Now we've taken response as far as we can. We have to now go to IR. In that workflow, and we do this with every one of our providers, is when we go over to IR and move you to the next stage, you must go and file a claim for your warranty solution or a case, as we have to be very careful about our insurance language. But we have to go file a case with them immediately to make sure that you will get your benefits. And so we try to make sure we're built into every workflow with our providers so that piece doesn't get dropped.
Can I ask really quickly, is there a reason why it's not being built in and automatically being claimed? Is there, because that's any time that you can get, I'm big in auto claims, instant first notice of loss through telematics is, I think, an incredible tool that people are not taking advantage of. It will reduce your total incurred significantly by having instant first notice of loss. And so if you could make it automatic, why wouldn't you make it automatic, I guess is the question.
So this has been a big topic of conversation. And the reason is because the product providers, but since they're the ones kind of sitting in the seat and not the end customer necessarily, because the product provider provides this service, they don't want to make those decisions for their customers.
So I guess the question is, can that be something that is put in their contracts? Is there a way to make this so it's more seamless? Because the other problem is they might be put on notice, the end customer, right, that they have some kind of breach, they have some kind of incident, but then they still fail to whether it's operational failure, it's a weekend, it's a holiday, it's Christmas, whatever it may be, something is the ball is dropped, and now they're in a bad situation. Why not just prevent that through contractual language, even between the first two parties of this relationship?
It's an interesting question, and we've gotten a lot of pushback from that on the providers. We actually originally had it designed that way, but the providers didn't want it. The customers don't want it. Interestingly enough, they really want to be able to make that decision. Yeah. And it's interesting because in many cases it becomes a deductible buyback if they have a different insurance policy than the one that they've purchased from us. And so really we just get notified and then go into kind of a holding pattern where we let the insurance process run. And then when we get the adjustment back, then we go, okay, well, here were your out-of-pocket expenses and here's your check. I mean, it's very simple. So that's that's the simplest version. And then when we're in the seat of having both warranty and insurance together, then our carrier still steps in. So it's good because there's a seamless event for that organization. And it becomes where we work in the background with our carrier to make the determination of what we're picking up and what they're picking up. And they really treat themselves almost as an excess position. And that way we can make sure that the whole investigation remediation process moves along very rapidly.
Yeah.
It's probably a question of capacity being interested in that as well, because I know those can be more difficult discussions. Dylan, remember we tried to do this, and even with all of your claims expertise, there were people in the capacity organization that thought they knew better, even after we presented the data. So I think at some point we gave up to an extent and said, okay, we'll solve this later on when we have some more data.
It's interesting to listen to both Kirsten and Dylan there describe some of this aspect of the claims side. And I wonder, having been an underwriter too, whether there's a bit of a culture in insurance underwriting in general that we're almost quite happy as an industry that customers buy their insurance policy, they put it in a drawer, they never look at it again, they never use it. I wonder if we've kind of self-inflicted some of this on our customers, not us necessarily around the table here, but as an industry. And the other thing is, it must be hard, Kirsten, to change a buyer's mentality to have that as a key component of their risk mitigation, risk transfer, risk philosophy to involve you early in the process. I think it's something people struggle with, right? Is changing customer behavior on that side.
And Dylan's exactly right about that angst. And we are slowly changing it now. Like I got a call not long ago from one of our insureds who also has the warranty, of course, and they called me to say that their endpoint product wasn't working right. Like the API connections kept dropping, and so they weren't getting right telemetry back into their managed SOC. And I was like, oh, okay, well, what do you want to do about it? And they're like, well, we want you to know because we want the product just to work. And I said, well, do you want to switch to a different endpoint product? And they're like, no, like we spent a lot of money implementing this, but we felt like if you're the ones who certified it, can you get them to pay better attention to this problem? And I was like, this is great. And it was actually a really exciting moment because instead of the insured putting it in a drawer and just ignoring it, it's like, no, we went through this process together. And so you're our advocate now. And so I feel like that's been a big change is now we're advocating for these organizations. And so I called the GM and I was like, look, we're getting complaints over here and we're going to decertify you if this continues on. Like you need to do something about this. You're impacting insurability for companies who are buying your product. So we need to get that fixed and you need to report back to us that you've fixed it. Okay. And so Peter, it was a whole different situation to be able to empower our insureds to be able to be partners with us instead of having it be adversarial.
Yeah. Peter, you said that nobody around the table. I'm thinking like, it's funny if you're on the policyholder side, and I'm thinking about the number of times, much smaller level of issue, but the number of times that like Chubb will send a home inspector out. I'm like, oh God, I got to deal with this guy. But totally great for us, right? It's prevention. It's making a record, and I should be much happier that they're sending these people out and making sure that our home is up to code.
Totally. It's a tough message. Sorry, Dylan. I was just going to say it's a tough message to get across to a customer, because everything you're saying, Kirsten, is pro customer. I want to be a partnership. The reason we have that clause is to be involved earlier, to help you get a better result. And also what you said before about the whole pricing landscape. We want our customers to pay a price that's realistic for this coverage, that makes sense, that's not overinflated. So everything we're saying is pro customer, pro policyholder.
Yeah.
And again, I think it's with Dylan's points about the clauses, which are very interesting to sit back and listen to. Mm-hmm. You almost have to make those clauses a positive for your customer.
Right. And the whole point is that I don't want to disclaim your claim. I want you to give notice. But what I can't have you do is create a claim that's bigger than it should be. And so when you're designing that policy, when you're designing your insurance product, that's what's in my mind. I want to make sure that I can resolve this claim for as little as possible, protect them as much as possible. And I'm trying to build this out so that we can intentionally take care of them. But it's just interesting because you have to balance that with what is marketable. And Kirsten, that's what you brought up. You said that's how we started, and that's not where we are now, because it wasn't palatable to the market. And so we can have these great ideas. We have to test those. We have to see if we can be that great innovator and try to change things. And then we have to probably dial it back at 20% and say, all right, well, customers sort of always right. They're making a poor decision right now. We love them. We want to sell them this product, but they're making a poor decision about essentially not automating this process for them and protecting them to the best of our ability. That's just how it's going to be. And so I guess when founders or even existing MJs are trying to build that new product, they just got to keep both of those things in mind. What's marketable, and that involves price, right? You can make the most amazing policy in the world, and it covers pretty much everything, but then there's going to be a price that goes along with that, and that might not be marketable. It could be the terms of your policy are just it causes undue stress for them, and they don't want to have that instant first notice of loss, whatever it may be. So finding that balance, that's a lot of that's communications. I mean, I guess that's where you dialed back that kind of provision at the beginning, right? I mean, that was from customer feedback. Yeah. And that's interesting to have evolved and tried to get a lot crisper at those things. And in the challenge, of course, always is, and this is the only definitive thing we get in our life, is that it depends in insurance. Everything depends. And it's like you've seen one claim and you've seen one claim, right? It's and that's the crazy part of this is, when we started, we thought, oh yeah, it'll be really simple. We can just adjudicate these things, no problem. We'll close them out, move on. And so then we had to move on. Then we had to institute a 15-day reporting period where it's like, you have to give us enough data within 2 weeks to be able to know whether you actually have something that we can pay or not. And then that's when we found this whole new group of people who, when they would get the form, they'd start to fill it out and then recognize, there was something like MFA was off or whatever wasn't right was, and then they would just go into this black hole. And so every 2 days, hey, come on, you have to give us this data or we can't. And finally we're like, okay, after 15 days, we're just closing it. Because we started to figure out that really those were the people who were non-compliant anyway. They just didn't want to say so.
I'd love to dig into distribution a bit, because obviously I think the most important thing, I mean, you need a great insurance product, you need capacity, you need a claim service, but none of those things matter unless you have distribution in my mind. And so you have a very interesting distribution model. And one that's kind of bifurcated a bit, it sounds like, in how you're deploying, your product or your set of products. How did that start? Like, did it evolve into what it is now? Was there a lot of experimentation? How did you kind of find the right mix for deploying part of the product this way, and then another part of the product through, I assume that's through brokers. And then maybe the last part of that question is, for those, for the insurance part of the product, which is, it probably could be bought from you directly, but maybe for the types of customers that you're selling to, they have a lot of other insurance products that they're purchasing through a risk manager, through a trusted broker. Like, how do you manage that process? So, sorry, I threw a lot out there, but love chatting about distribution, and you have a very interesting model, so I'd love to dig into it a bit.
Well, to start, what I really wanted was to create almost a static pricing model for insurance, so that people could figure out, I buy these products, this is my price, I'm in this risk category, as opposed to what's your revenue, what's your sector, do you point to the north with the right hand or the left hand, like all these crazy things that sometimes really don't, in my opinion, don't have a huge bearing on the risk, but certainly have complexity to the process. And it was always, so we developed this platform so that managed services, through certain partners who only distribute to managed service providers, would have a fully licensed, regulated platform off of which they could then provide insurance programs to their customers. And what we got all the time was, well, wait a minute. So how does that mean that I'm not selling insurance? And how do I not get in trouble? And I don't understand insurance in any way. I don't want to sell insurance. I sell security stuff or IT stuff. And so part of the evolution for us was to kind of flip the model around, to get a product in place where, like the warranty solution, a product that they could sell, that they could embed, that wasn't complex, that created some value. And this was particularly a time when managed services were not providing security products as much as they are today, and unbeknownst to probably their customers who thought they were providing security. so they kind of caught up with we really have to provide a much more robust security platform to our customers. And this was a good way to help move their customers into additional products where there was a value attached to it. And so, but the idea was always to get this insurance solution attached to it so that it was still simple to acquire. But you can imagine going to a capacity provider and saying, hey, so what I want to do is I want one price, no matter what the risk is, and that's what it is. And up to a certain, but you can cap the revenue. That's cool. And they were like, have you lost your mind? Like, that's never going to happen. Just go away. So we had versions of it. We got some static pricing models, got some programs in place. But me being the dog with the bone, I just kept at it. And then we finally had enough data where I was like, look, what you need to do is basically treat us like an initial small primary placement, and rate yourselves as excess. That's how you get to this model. And finally, we got there. And so then we got our capacity providers to do it. And it's been hugely successful, because now we're able to create bookends where you have the providers who can stay out of the regulated space, but can talk about the reason why warranty is important is because you actually unlock your access to the insurance program, because now we have an end-to-end solution that provides real value to you. And the story kind of dropped all into place about 2.5 years ago.
And then how do you work with brokers today? Like, and how do you place that coverage? Does it depend on the size of the company, maybe the current relationship that a company has with a brokering group or a risk manager? Do you play both ends? Like, you can buy directly from you, or you can buy through one of our wholesale partners or one of our retail partners?
So initially, we've never been exclusionary in the sense of not wanting to work with brokers, but certainly the first thing we had to figure out was the distribution model, and like, how does it all work? What's the workflow? And so a lot of it was direct, just because it was simpler for us to manage the process. Then we got this really cool platform called Loro, and we were able to work the broker workflow into that, which has been very helpful. And so more and more now we have people who bring their brokers into the conversation. So the retail brokers are becoming more and more interested in partnering with us, and we love that. Of course, there has been some dissonance in you just really took a big chunk out of my commission check because you've lowered the cost of the premium so much. And so, we have other programs for brokers that include assessments and other things that can replace applications, but put warranty in with the assessment so that the whole solution might be the same, but the customer's getting way different value out of the placement of that product. So we're trying to find different ways, particularly for wholesalers, to help them participate, because that's really where we're finding the most pushback still. The retail market's kind of calming itself down a little bit. And then, of course, customers are just saying, I want this product, and you can place it in my portfolio, or I'm going to go buy it, but I want it.
I do think one of my favorite conversation with you, Kirsten, was a couple years ago or a year ago, whatever it was, where we brought Peter in. You were lamenting about your policy admin system woes, and I was like, I just met this really cool guy, Peter, and I know nothing about his platform, but he's British. He has a nice accent, and he's very dapper looking. So you should chat with him. And you came back and you're like, all those things true, and a great system, So I'm happy that's bearing fruit.
You guys are too kind on this always. Yeah.
So thank you on the distribution stuff. I think it's finding your place, the right mix, right? It's experimentation, and something else for people to remember as you're building, your platform, building your distribution model. There's not a one size fits all. And a lot of experimentation might be needed, and probably not a perfect state as well, right? Like you talked about that evolution of the product itself and how you kept pushing to say, hey, like this is what we need to do to fit this distribution model, and how do we get there? So one last thing for me, and then Peter loves to end on kind of the legacy question, but I'm curious just about your thoughts in general about our space, right? The insurance space, and how good we are in preventing cybersecurity threats or protecting our customers' data, our policyholders' data. I think one trend I'm seeing personally in the carriers and the MGAs and wholesalers that we work with, their requests of their trading partners, of their independent agent producers, to show and verify that they have cybersecurity coverage. Right? So it's no longer just E&O contractual mandates. It's now like you need to have this type of cyber coverage before we'll even let you sell a policy for us. And so I think it's becoming more of an issue within the insurance space. Obviously, we have a lot of data on our policyholders that if it was ever leaked would be problematic. You're curious about if we're as good as like kind of how you're pushing the rest of the economy to be.
Yes, I think we are a little bit laggard. I mean, I still see lots of attached PDFs, much to my chagrin, flying around, which pains me somewhat. But to the original conversation, the challenge isn't our general lack of willingness to have secured communications. It is, how many times do you get one of those login things for the secured portal and it doesn't work? And so creating friction for the customer experience, and that it pains me to say this as a security person, to create those layers of friction so that you frustrate your customer is a no-go, right? It's just something that is very difficult. And so ultimately that becomes the balance. But to your question on the other side, what I find interesting is, we've been blamed for years for ransom attacks, because it's like, oh, well, so someone can just go and break into someone's network and find their policy and know exactly how much they're covered for. And I'm like, really? So would you like go into I'm going to find and replace, and as a hacker, I'm going to look for your insurance policy because that's not really how it's played out. But that's the narrative that got built, was that because we were sending everything in open text, that's what was creating the problem. And so we do have to manage some of those things, right? We have to help people feel like that data is secure, and you have access to your policy if you actually do get locked out. But it's also this thing where we as an industry have to be much less reactionary about things, because that's when we have a tendency to get more motivated to do things. And I see that a lot, just even in applications, where it's like, oh, we didn't think about, this thing, SolarWinds, we should add that to the list. And it's like, that doesn't solve a problem. It doesn't answer a question. I know it makes you feel better, but so it's doing things, I think, more proactively as an industry to like, as you say, to require cyber insurance, but also that they really are doing the right security controls. And we know even managed services, the reason why their insurance policies are so expensive is because during the really tough times, I mean, they were the one-to-many solution for every hacker, and they were, and so we have these little MSPs who are 600,000 in revenue, and we're like, well, sorry, that's like a $7,000 policy. And they're like, what? Like, it's like, well, you're a huge risk.
Yeah.
That's what it's priced at, right? So it's that proactive thing, and knowing that small businesses are still small businesses, regardless of whether they know better or not.
Yeah, we're seeing states like New York, for instance, has now come out and demanded like 2FA for insurance agents and carriers. I imagine more regulators are going to take that stance, and even in New York, you have to certify as an agent that you have security procedures in place. There's opt-outs given your size, but still, it's I think it's just a trend that's going to continue. That, the ability to show security.
Yeah, the only thing I'd say on the regulation side is I think regulators in general have got to be a little bit careful with some of this stuff they come out with, because
Peter, that's not going to happen.
Yeah, but it's so the thing is,
they're not going to be careful.
Yeah, of course, they're very overbearing, of course. But the reality is, a lot of the stuff that comes out is not future proofed, and then these companies are trying to innovate, and the biggest obstacle blocker to evolution and growth is archaic regulation that's not evolving with the speed the technology is. So I see it a lot, especially in this building I'm in today, right, in the Lloyd's building, of what they would love to do and what they're actually able to do, and it's a bit of a shame.
Can I ask really quickly, as far as regulations, and this is to everybody, but certainly Kirsten, we'll start with you. But am I the only one that feels it's a little crazy for a regulator to then provide massive fines when there's a breach? And because I understand the need to keep things secure and the desire to keep things secure. However, if they have some level of security, any level of security, aren't they actually the victim in this? It's like punishing the victim for not being, if I got mugged and I tell the police and they're like, well, I'm going to fine you now because you've been mugged. Because you should have had a gun, you should know martial arts, you should have defended yourself better, right? It's kind of messed up to be hitting them with a multi-million-dollar fine, because that's what I've been seeing. I've seen in the last few days, I've seen multi-million-dollar fines put on large corporations because they couldn't secure their data well enough. And you go,
the insurance space.
It's terrible.
Yeah,
it's terrible.
Yeah, happening to insurers.
So anyway, that's my opinion. I understand the need to also protect your client's information, but if you have any level of protection there, is there a way to prevent absolutely every attack? Is there a way? And the answer is no. So then how do we decide when we find someone and when we don't?
There's a first step you can take, Dylan. It's work with Cysurance, and then after that, then we can figure out if there's more to do.
Yeah.
But Kirsten, what's your thoughts? What's your thoughts on that? Besides, of course, the obvious of selecting to work with you.
Well, no, I do agree with you, and there, I think there's like the willful piece, right? We have seen a couple of claims that literally were shocking. We saw one where they were a background check organization for employment background checks, and shut off MFA and didn't connect any of their APIs to their security provider. So we were completely blind, and it's in complete violation of the data privacy laws of the state that they're in, right? And that's one of our requirements is you have to make best efforts. To your point, like you have.
What's a best effort? And here, let me give you another example really quickly. Car manufacturers can make cars more safe than they are right now. Every single manufacturer has had conversations and do on a regular basis with every single model they put out that decides that certain features are not going to be on this vehicle. We're going to make this car less safe than we possibly can because it is not then marketable. I can't sell $1 billion car, right? And so we're in a situation where's the line of best efforts?
Well, and that's always the commercially reasonable or any of those clauses that allow, and that's where everyone says that we're snake oil salespeople in insurance because of those clauses. But for this example, their behavior was 100% negligent. You shut off MFA in your email system when that's where you keep all of your records, and you don't connect your APIs to monitor for adversarial behavior. That to me is, so to me, that person, that organization deserves a fine potentially, because they were going backwards in terms of the basic requirements that were put on them to protect data. But then we've had a lot of conversations on the other spectrum, which is I'm on a roadmap, and that's the harder part. Is if you're like a healthcare organization, and you know this as well, they have no clue what the requirements are. That I had someone say to me, I don't like this annual assessment requirement. And I'm like, that's not my requirement. That's a HIPAA requirement. That's the law. That's not a Kirsten rule. So, but for a lot of people, they're on the roadmap. And if you're in the middle of implementation, and these implementations can take 2 years, and not because you're negligent and not because you're cheap or lazy, it just takes that much time. Being able to plead the case, to your point, that, look, we've been working on this implementation. We were halfway through it and this bad thing happened. But should we really be fined? We were doing everything we could. We made the investment. We've hired the people. We do our assessments.
Yeah.
And now I have this, and the, like with California, the minimum damages thing, like regardless, like you shouldn't lose data at all. And it's like, but how is that? Even in the best efforts to encrypt things, I mean, we just know it's data is very slippery.
And how is it that we can prevent the next thing, the next manner in which people attack, or just the pure force of the attacks, right? If there are more IoT devices, we can have more zombie DDoS attacks. You know, they're larger in magnitude. When we have faster computation, you know, we have more risk, right? How fast, how many digits should my password be? Should they be biometric? What's the thing that's going to make the difference between, you know, truly protecting your systems and not, right? But back, you know, before it would be, all right, text me a 6-digit PIN, you know, great. But my understanding is now they're jumping in front of that email,
Yep.
getting that information, and then logging in as you. So the very things we put in place to protect ourselves have now been used against us, and that will continue to happen forever. So it's how do you get in front of that, and how do regulators have the right to fine so many people? And if they're giving honest efforts, you know, obviously you've given I know there's plenty of companies that do nothing and ensure they should be fined, but the ones that try, that's a tricky thing.
Dylan's libertarianism is shining through here.
I was going to say on that optimistic note, if we can't do anything, which
well, yeah, Kirsten has blackjack, 7:30 a.m. blackjack to get.
Yeah, that's right. I have to go raise some money.
Yeah, absolutely. So, Kirsten, we love to wrap these sessions up with a quite grandiose type question of what your legacy and how you would like your legacy to be in the space. Before we come to that, just for everyone listening, if they'd like to find out more about Cysurance, they can go to cysurance.com, right, which is CYsurance, or they can connect with Kirsten Bay at LinkedIn. I'm sure you have a great presence on there, often presenting the company and yourself and talking in depth about many of the topics we spoke about today, which we kind of scratched the surface on. So go and connect on LinkedIn and meet at some of these events you're attending. Thanks so much for joining us. It's been amazing to have you. So maybe we can end with that. What do you see as your legacy, personally, professionally, in general? We'd love to hear.
Well, the thing that I've come to realize that I'm very proud of is that we've created a new category in insurance, like in the way that we do it. And so I feel like from that standpoint, we've done something really hard that we've been successful with. And so I want to build on that. But ultimately, I think the biggest thing for me is really creating that different value chain. Like when I had these I feel like this is such a silly story, but my head of security and the CFO, and it's like, why? Like, how can you do this so cheaply? And what are you doing? And how is this working? And I explained it to the CFO, and they were like, oh, wow, that's really cool. Like, so do you want this thing? And the security guy's like, yeah, we need it. Like, really need this. And to have them together, making a decision together that helps the business, to me, that's that's the legacy that I've worked for well over almost 2 decades on, which is changing the dynamic of how we secure and help companies grow, because it's about now creating foundations to help organizations be successful in ways that allow them to do more. And so if that's what we have done with Cysurance, then I feel that's a win.
Nice. Very cool.
Bringing
Kirsten,
C-suites together. That's what we're doing.
That's right.
the dream of every child.
The dream of our child, all the C's together.
Yeah. Kirsten, thank you so much for your time. This has been great.
Thank you.
Lovely.
I hope to see you in person soon. We gotta grab dinner. We gotta get Peter over on this side of the pond. We gotta get Dylan up from Virginia. Come hang out in New York, guys. Like it's
Yeah,
Sounds good. We'll be there we'll be there in June. Let's do it. Yeah.
That's right.
Yeah, absolutely. All right. Kirsten, thank you so much. Have a great
Thank
morning,
you.
great conference. I do hope that you win a little bit of money playing blackjack. If not, get some free drinks.
That's right.
All right.
Thank
See you
you.
later.
Thanks so much.
Bye-bye.
Thank you.
Thank you.
Thanks.
Peter, another great guest.
Yeah, we've had
I
some
love
brilliant
Kirsten.
ones.
She's such a great person.
Yep. Aren't you guys amazed every guest we have on? That, we talk a lot about, there's a lot of MGAs starting up right now. And then you see the caliber of the people that are successful and how they kind of dominate their space. And so they're experts in what they're doing. It really shows you what it takes to be successful, doesn't it, in this world? And it's not as easy as it looks. We say that every week, but it's really not.
Yeah, that tenacity and her being an expert in her space, but then becoming an expert in the insurance space
And warranty space at the same time.
warranty space. Yeah.
Yep.
Yeah. Super interesting person.
One of the more technical conversations we've had. I think we got into a lot of.
I wrote down a lot of things. I'm going to spend a couple hours having a conversation with my ChatGPT, my British ChatGPT. Do you guys use ChatGPT voice? Doing any of that? You can pick the accent you want them to have.
I'm doing the classic one, voice. I haven't changed it.
Oh, Dylan, try the British one out. You will feel smarter after having a conversation with them.
I just don't want them to be talking down on me. That's
that tends to be what we do. Yeah.
They do every once in a while. It slips in a. Are you interested in secession? Would you like to come back?
Right. Did you learn the fact the other day that George Washington was quite into his cricket? So there you go.
Oh, there we go.
Wow.
There you go.
Wow.
Yeah. Was that through ChatGPT hallucination?
No, I'm not sure. I believe
this is a true fact. It's a written down fact.
It's a fact I may or may have not have made up for this podcast. No, I think it's true. You'll have to go away and do your own research, as we always say. Yeah. You know what I loved about this show as well, Dylan. Credit to you. I think you show your knowledge and detail of the claims and the wording space, because it was very interesting for me, the conversation around the notice of loss, and that's seen as always a negative thing for customers, but it got me thinking the amount you could do with that one clause in a policy. You could have some license to create something really innovative and different there.
I agree. And I think the deductibles and self-insured retentions are also things that are normally thought of as negatives. And I think that you can do so much with that to incentive good behavior. And I think that so the design of your policy, I think we're way too rigid on that. I don't think we're doing enough to make it actually. Number one, I think we should be using plain English in most contracts where we can. Obviously, there are legal terms. When we talk about subrogation, right? When we're talking about any clause that has to be right legalese, I get it, fine. But the majority of a policy should be plain English. And if we could really put everything that is related to a specific subject into one specific area of the policy, so that you're not jumping around. Because to be quite frank, when you get a huge E&S policy, you're going to find that you have an insuring agreement, then you're going to have the specific coverage that you're talking about. All right, sounds like I got coverage. Great. And then there's a condition, there's an exclusion, and then gives back coverage somewhere else in the policy, and it just goes back and forth so many times, and it's and that adds to ambiguity. It adds to more litigation. Let's prevent as much litigation as we can. If we are clearer about what it is that we're insuring, then we're going to have less litigation, and I think that's overall a good thing. Sorry, lawyers, but I would rather pay less in legal fees. I'd like to bring down total incurred, and generally coverage expenses like that are not necessarily going to be shown on the loss side, but they're expenses that you still have to incur as a carrier or any party defending their.
We're gonna get a lot of hate mail now from both the Plaintiffs Association and the defense bar.
Actually, it gets even better than that. The IRS is coming after us after I insulted the government for finding.
Yeah, you're going to get audited.
Yeah.
All the regulators. Yeah,
all the regulators.
I had a claims guy build when I had my MGA. I had a claims guy build my policy. Real asshole, but he did a good job.
Bad guy. Yeah. He constantly carried around a hammer. It's a weird full circle.
Yeah.
Full circle.
Yeah. His name was Dylan. I don't know if you know him, but
never heard of him.
He did a real good job.
No one's heard of me. Let's be clear.
What do you guys got going on today? Anything, Peter? You're gonna maybe catch dessert with John McNeil. Give him
running. Yeah, maybe grab a coffee. No, running around the city today. So just about to head off to meet a big global broker here in town, chatting about all things distribution as usual. But no, it's always fun to come here. It does feel. I mean, the Lloyd's is so intertwined with the US market. So all we do is chat about US risk when I'm here. But it's super exciting to hear what's going on. So yeah, that's my afternoon. What about you guys?
Well, I'm just excited that you're talking about your children. The UK.
Oh yeah, Peter. I forgot you had a kid.
About the US.
For guys, it goes so fast. Right,
the
day after the birth, you just kind of forget that it's there.
Yeah, that's all.
That was last week.
No, he's doing great. Wife is a real hero, so I'm still getting a little bit of sleep, bless her. But it's amazing. I mean, in the weeks how much they change is just incredible. It's just a wonder, isn't it? But it's also nice to get to escape and speak to adults for a day. Yeah, and then beautiful to come back home. Yeah.
I'm gonna give some blood this afternoon. Not because I'm generous. I read a study about microplastics. And the easiest way to get rid of them is now by giving a lot of blood. So I'm trying to figure out how I can game the system. Taking a lot of iron.
Free biscuits as well. Yeah.
Free lunch. Yeah, orange juice and biscuit.
Now that. In all honesty, that's a lovely thing to do. That's a good thing to do. More people should do that.
It is, and actually, Type and Risk has a team, within the American Red Cross. Sorry, Peter, I don't think you can join unless you do it while you're here. But Doug, you should join our team, and we're showing. It shows how many lives you saved. Yeah, well, we don't take it, but they will add to the overall count of what Type and Risk has.
You're not worker. I thought it was like Type and Risk is now outsourcing or insourcing blood donation. You are donating as a team.
That is correct. You got
Dylan, I don't know if you want me on your team, because I do at some point. I'm trying to run like 3 different blood organizations so I can do it more often than you're supposed to. Again, I'm just trying to get my microplastics down. So it's really less about the donation, more about.
You should try leeches. That's what I hear is the new trend.
Yeah. I'll look into that. All right. Well, guys, we got busy afternoons. Let's let Peter go and do his Lloyd stuff. And actually, we're recording again tomorrow. We got another recording tomorrow. We're
excited about that one. That's going to be really interesting as well.
Yeah, our first non-US folks. So make Peter feel a little bit more at home, even though it's not in the UK.
Global podcast, aren't we? Yeah.
Cool. All right, guys. We'll have a good day, and we'll chat tomorrow.
Take care.
See you soon.
Bye-bye. Thanks, everyone, for listening. Bye-bye.